When most of us hear LLC, we think of one thing, a simple shield for our business. But in this explainer, we're going to go way beyond that basic idea. We're going to uncover how LLCs can be built not just for protection, but as a seriously powerful engine for financial efficiency. Right, so while that legal wall is absolutely crucial, it's really only half the story. Drawing from expert financial reports, we're going to see that the real power of an LLC is unlocked through smart, intentional design. It's about turning it from just a shield into a full-blown strategic wealth engine. Okay, so let's start with the baseline definition pretty much everyone knows. An LLC is a legal business structure, and its main job is to separate your personal stuff, your house, your savings, from your business liabilities. It's also what they call a pass-through entity, which just means the profits are typically taxed on your personal return. So you get to avoid that nasty double taxation you see with big corporations. So here's the game plan for how we'll break this all down. We'll kick things off with the master blueprint. Then we'll dive into the specific LLCs that actually protect your assets. From there, we'll get into the fun stuff, how to optimize your income. And finally, we'll wrap up with some really advanced strategies for legacy and management. All right, let's jump right into the master blueprint that holds this entire strategy together. Financial experts often call this the T formation, and it's a really powerful way to structure your entire financial world for both maximum protection and tax efficiency. The whole idea here is compartmentalization. It's like building firewalls in your financial life. This structure is designed to manage risk, slash your taxes, and build long-term wealth, all by giving every single asset and every income stream its own specific protected job within the system. And you can see the three pillars of the structure so clearly right here. The base of that T, that's your trust. It's the foundation for your entire estate. Then, the left arm is your operational engine. These are the LLCs out there hustling and actively making money. And over on the right, you've got the asset vault, which is where you safely store your passive income-producing assets, like real estate. So let's get into the nitty-gritty, the actual building blocks. How do different kinds of LLCs plug into this blueprint? We'll start with the two most fundamental types, one for just holding your stuff and another one for actually running the business. Now, this distinction is so simple, but it is absolutely critical. One LLC is for owning things, and the other one is for doing things. The holding LLC is all about passive ownership, just sitting there protecting an asset. The operational LLC, on the other hand, is your active business. It's out there in the world making things happen. A key function of the holding LLC is to basically act like a safe. Let's say someone slips and falls at a rental property you own. They sue the LLC, not you personally. Boom, the risk is isolated to just that one asset. It also gives you a huge layer of privacy because the LLC's name is on public records, not yours. Okay, now for the operational LLC. This is your engine for earning money. It's what you use for your freelance gig, your consulting firm, your online shop, whatever. It gives you that legal protection and credibility. But, and this is a big but, as it gets more successful, it creates a pretty big tax problem. Every single dollar of profit gets slammed with the full 15.3% self-employment tax. Ouch. And that brings us to the core of tax strategy. That 15.3% tax drag is a major hurdle. But as we're about to see, there are some pretty slick advanced structures that can dramatically cut down that liability once your business really starts making money. Let's be crystal clear on the issue here. If your operational LLC makes, say, $100,000 in net profit, that entire amount is subject to self-employment tax. This is the #1 pain point for any successful sole proprietor or standard LLC owner. It just eats away at your earnings. So here's the solution, and it's brilliant. By filing a simple form with the IRS, you can have your LLC taxed as an S corporation. Now, this doesn't change your legal structure at all, but it completely transforms your tax situation because it lets you split your income into a salary and a distribution. And you can see the impact right here in the numbers. With a standard LLC, the whole 100 grand gets hit with that 15.3% tax. But with the S Corp election, only your reasonable salary, let's say it's $30,000, gets taxed. The other $70,000? That's a profit distribution, which is not subject to self-employment tax. That one little change just saved you over $10,000. This strategy really becomes a no-brainer once your net profit starts creeping over $50,000 or $60,000 a year. Okay, so you have the S Corp strategy dialed in for a single business. Great. But what happens when you've got multiple things going on? For those of you with several businesses or properties, a Management LLC can act as a central command hub to coordinate everything. So here's how this works. Your Management LLC charges your other businesses for services, things like bookkeeping, marketing, whatever. Those fees become tax-deductible expenses for your other companies, and it funnels all that cash flow into one central place. And from there, you can coordinate your big picture tax planning and max out things like retirement contributions. All right, finally, let's zoom out and look at the most advanced strategies. These are really focused on the long game, preserving wealth and making sure it gets transferred smoothly to the next generation. The Family LLC is an incredibly sophisticated tool for managing generational wealth. So instead of just gifting a property directly, parents can gift membership interests, little slices of ownership in the LLC over time, which is often way more tax efficient. This structure also keeps a shared asset like a family vacation home under one central management, while protecting it from things like a potential divorce or creditors down the line. Now, for the final layer of armor, some expert reports recommend adding what's called a parent company to the structure. This is a very advanced strategy, and it's all about getting institutional level privacy and consolidating control over all your asset holding entities. You can think of this structure as a corporate veil, but specifically for your passive assets. The parent company literally owns all your individual holding LLCs, which takes your personal name even further out of public records. It also centralizes all the finances from those passive assets, and it can pay your active management company for its services, all while filing a single consolidated tax return for all the subsidiaries it owns. So let's just put the whole system together real quick. We've gone way beyond that simple LLC as a shield idea, right? Instead, we've got a full framework where every single LLC type has a very specific job. Holding LLCs to isolate, operational LLCs to run the business, the S Corp election to save on tax, Management LLCs to centralize everything, and Family LLCs to transfer your legacy. At the end of the day, the power of this system doesn't come from just creating a bunch of entities. It comes from strategic implementation, from actually understanding the specific purpose of each piece of the puzzle and putting it in the right place at the right time. And that really is the central idea here. It's about making a shift, moving from a financial setup that kind of just happened to an architecture that is built by design. One that's truly engineered for protection, efficiency, and growth. So the question to ask yourself is this: is your financial structure built by chance, or is it built by design?